let's start with those First Bank results coming out yesterday. Now, an interesting fact I just found is that the 4.4 billion naira of assets sitting on its balance sheet is equal to Nigeria's 2011 budget. So that's really a strong bank there. Looking at those numbers, though, really strong growth, 23% year-on-year growth in first half earnings. Quarter-on-quarter earnings were up by 48%. Margins have improved here. What did you take out of those numbers?
First Bank were very impressive. Bottom line, the market will be happy with them. Strong top line growth, largely driven by net. We saw loan growth at about 13%, which was quite decent. You saw NPLs drop to about 3% levels. So by and large, you know, 31 billion perspective. First Bank is making about 200 million naira every day in the last 6 months. That's $1 million every day, at least.
Vativa has a buy rating on the stock with a 9-month target price of 16.85. Now that represents almost 40% upside potential from today's price. Is this a stock that you would be adding to your portfolio, keeping in your stock of banking stocks?
You know, via research is one of our top picks. It's one of the key names we're looking at, you know, with Zenith Bank, Sky Bank. We think it's a great bank and it's trading at a discount to market at 1.2 times book. Saw that the banking sector is the worst performing sector in the market. It's lost 13% year to date. You know, and we think, and the beauties are somewhere around 18%. So we think that, you know, the banking sector by and large is very cheap. It used to be about 60% of the market. Now the banking sector accounts for 30% of the total market cap. Obviously, if we take into consideration there's some dilution from Dangote cement listing. But we think the banking sector, looking at the banks that are healthy, which is Zenith, First Bank, Sky Bank, are looking very cheap at the moment.
Nestle also released its results yesterday, cost rising 27% year-on-year, turnover growing 19%. So this only saw a growth in profits of 3.6% to 257 billion naira. Where have the pressure points been for this company?
I think, you know, what we need to look at, looking at those numbers, is you look at the quarter-on-quarter performance. I think the performance in the second quarter of 2011 were actually very good. We saw strong growth in top line, actually, and also saw strong numbers being delivered in the bottom line. I mean, the company management has guided that, you know, we expect to see some pressures on the cost line, which is why you saw the 27% hike. They expected that, obviously, they built a new factory, Flower Gates. We expect that there'll be higher depreciation costs charged on that. There's higher fuel costs, higher administrative fees. So, I mean, by and large, you know, we expect that administrative cost line will be higher. However, the volumes have trickled in. You're seeing strong growth on the top line, 20% growth. You know, I think that's still very impressive. And I think that, you know, the stock will still stay at the levels in which we've seen it. I mean, market reaction to the numbers will largely remain flat. That's largely because people think that Nestle is expensive. But
going forward, taking into account that new factory output, what are your earnings outlook and capacity based on this new capacity for the stock?
Well, with the new installations, Nestle expects that they'll be able to double their business in the next 5 years. So we expect to see stronger growth numbers. Marghi remains the key driver of this growth, and which is why the factory is largely a seasoning culinary factory. So we expect to see stronger growth on the top line, and obviously we expect that the efficiencies from the factory should trickle into the bottom line, especially as we're going to see higher cost numbers.
Oando released a solid first half earnings report. Now it had a 55% growth in turnover, net profit improving by 25% to 6.7 billion naira. The company hosted a conference call yesterday. Were there any insights into these numbers that you got out of that?
Management hosted a call yesterday, and I think one of the key takeaways is that, you know, Oando has been able to deliver on its guidance to the market. They've been able to meet up with the numbers, you know, $20 million in profitability every quarter. However, there are some projects which we expect to come on stream, some pipelines, which haven't come on stream. We expect those to come on stream later in Q4, and that should have a better impact on the bottom line. I think the outlook for the company remains very strong. The price has dipped aggressively. It's been punished by the market, and we think it's very cheap at these levels. And I think it's a stock to look at.
How do you expect the markets to open and trade today on the back of that surprise 75 basis point hike by the governor yesterday? Do you think there will be any reaction from the bond market?
What we saw the market, bond market or equity market?
Well, let's start with the equity market quickly, and then we can take a look at the bond market.
Okay, I mean, the equity market, I mean, it's been largely low, it's been going down. We've been seeing huge demand on the back of the numbers being released. What we expect today, we started seeing some selling pressure coming through from people holding propositions. However, the demand remains very strong in some of the key banks and also in the consumer space. So we expect that we should still see some upward movements on the market today. For the bond market, we think it's largely unclear what the impact will be until the market opens. I don't expect to see the 75 basis points in hike in MPC have an absolute impact on the yields. We should see some minor movements. However, I would expect to see the full impact of that increase on T-bills. So we expect to see, but however, in the bond market, there's still great demand. We're still seeing a lot of people buying the 20-year bonds.
There was one comment that I took out of Governor Sanusi's comments yesterday, stating that he expects all banks to be recapitalized by the end of September. Do you think on the back of this type of comment we should see some positive sentiment around the banking sector today?
Like we've said, we remain very bullish on the healthy banks and largely the banks who are not engaging in any sort of M&A at the moment. So Zenith Bank, the Sky banks of this world, the First Bank, GTB remain sort of the kind of banks we'll be looking at. We will still stay away from the rescued banks in the medium term, largely because there's still uncertainties in some of these names. However, it's positive that we're seeing that the CBN is closing deals and transactions in terms of M&A in some of these rescued banks. I think the outlook for the banking sector is improving.